Hello, this is Catherine Morgan-Nance. Welcome back. This is part 2 of our flexible budget video series. In this particular video, I would like to pose a problem to you for Lynn's landscaping and then take a look at how we might complete a flexible budget, and perhaps we will also talk about variances in this video. So here's the problem. Lynn's landscaping uses the number of lawns mowed as its measure of activity. During February, the company budgeted for 500 lawns mowed using the formulas below, but its actual level of activity was 550 lawns, 50 lawns more than they originally budgeted. The company has provided the following data concerning the formulas used in its budgeting and its actual results for February. Calculate the revenue, spending, and overall variance for the month. So here we see that the revenue and cost formulas are the same as we looked at in the prior video. However, the actual results are based on 550 lawns. The actual results are coming from the general ledger books and records of the company's actual accounting system for February. So let's talk about a flexible budget then. A flexible budget will be prepared using the planning, variable, and fixed revenue and cost formulas, but we will multiply those where appropriate by the actual results of 550 lawns. So let's move to the next worksheet and see how we might build a flexible budget and then compare it to actual results. Again, our flexible budget will be based on our actual lawns mowed of 550 lawns. And at a actual level of lawns of 550 lawns, we would expect to earn $41,250 in revenue. And I'll verify that for you here with the calculator. $75 times 550 lawns is $41,250. We will compare that amount to actual results when we are trying to determine our variance. And it's important to note here that that old planning budget based on 500 lawns, let's take a look at it. That old planning budget based on 500 lawns and a revenue level of $37,500 is no longer valid. The only thing that's valid now is that we consider the actual number of lawns that we mowed, 550, and we use that number of lawns to project what our revenues and what our expenses will be using the original cost formulas. Okay, so just like we saw previously, we can calculate our costs for wages and salaries by simply copying our formulas down. I could actually show this to you on a calculator if you wish. Wages and salaries are $30 per lawn times 550 lawns. So we would expect to pay $16,500 plus a fixed component of $5,000. We would expect to pay $21,500 for wages and salaries, and the remainder of our expenses we would expect to pay in total $34,600 in expense and earn net operating income of $6,650. Okay then, so the flexible budget tells us that our revenue should be $41,250 at a level of activity of 550 lawns, and meanwhile, we earn more than that. We earn $43,000, and maybe that is because we did some extra work for our homeowners. We cleared up some landscaping, etc. At any rate, our variance would be $43,000 actual minus $41,250 flexible budget, we'd have a favorable revenue variance of $1,750. On the other hand, we can see that we spent more in wages and salaries than our flexible budget permitted. And again, our flexible budget is relatively valid at a level of activity of 550 lawns. The level of activity is the same as our actual results. So had we spent according to plan, we would have paid $21,500 for wages and salary. Instead, we paid $2,000 more. I'm anticipating perhaps because we mowed more lawns than anticipated, and perhaps we did some other services like clearing up limbs and leaves and maybe doing some hedge trimming, etc., that perhaps we paid some overtime to people. In any event, our variance will be unfavorable, and I'm going to show unfavorable variances on this spreadsheet as negative numbers. So we will calculate the difference between what we were supposed to pay, $21,500, and what we actually paid, $23,500, and we will see that we have a negative or an unfavorable variance here. The same is true for gasoline and supplies. We were supposed to pay $4,950. Instead, we spent $5,100. And, perhaps that is because we used more gas than anticipated. And I don't know, the cost per gallon was a little bit more. And we'd have to investigate that as the accountant for the company. At any event, the variance would be $150 unfavorable, and we could do that same process for every one of these expense accounts, calculating a variance. Now, what's interesting here, we have favorable equipment maintenance variance of $350, and I suppose that could arise because we didn't have the time to actually maintain our equipment. Later in the year, we might find that we are unfavorable with an offsetting variance. And some of our fixed expenses, well, we spent exactly what we planned to spend for rent and equipment depreciation. However, for insurance, we ended up spending $200 more, and we had budgeted $1,000 and spent $1,200, yielding a $200 unfavorable variance. And that could just be because our insurance agent called us and said, you know what, you have a premium increase. And these things happen. I wouldn't be overly concerned about that amount. In any event, the big picture shows that we have a $200 unfavorable overall variance. Our net operating income was budgeted to be $6,650, and we actually earned $6,450. We earned $200 less than we planned to, and we can see that by looking at our revenue variance, which is a favorable variance of $1,750, and compare it to our unfavorable expense variance of $1,950. So our spending variance is unfavorable and higher than our revenue variance, and therefore our overall variance is unfavorable. I hope that makes sense. Please spend a little bit of time looking at these numbers and doing your own calculations to make sure you understand where I'm getting the data. In summary, flexible budgets are prepared using the planning budget cost formulas, but using the actual level of activity. And therefore, flexible budgets are a better representation of what we should have earned and what we should have spent than the planning budget. That's it for our series, and see you soon.